Hello and welcome. Real estate is in focus, and this is because some of the numbers have been on the weaker side. Of course, we've got one or two outliers, but otherwise, overall, the numbers look softish for Q3. Now, the question therefore is what's keeping those numbers subdued, and whether Q4 will be strong enough for a recovery and guidances to get achieved. One of those is obviously a Keystone Realtors. In terms of Keystone Realtors, the numbers itself, around 2,700 crore of pre-sales. They need to achieve 4,000 crore of pre-sales by end of this year. We'll try and get a sense as to whether they can actually do that or not. That's the first question that pops up in my mind when I'm looking at a Keystone. The first consideration. The second one is with regard to drivers for FY26. So if they were to achieve the 4,000 crore GDV or rather pre-sales guidance, I beg your pardon, in that case, what are the drivers that's going to help them achieve that for FY26? The third piece is with regard to FY26 top line. Top line and execution, is there going to be a marked acceleration that we're going to see? Because H1, from an execution standpoint, was also slightly on the softer side. So when you're looking at these real estate names, and when you're looking at price to earnings multiples currently, they are a stretch. But execution and ramp up is going to be crucial. If they do that, then you could see a fall with regard to price to earnings ratios. And therefore, I'd want to understand the timeline for revenue as well as ROE expansion or jump. And there is an expected marked jump, especially in revenue. In fact, the three analysts that track this counter expect a 30% top line growth in FY26 alone. While the H1 numbers don't point to that at all, I'd be keen to know whether H2 will be that strong, and if not, will FY27 be the year in which we'll see a revenue as well as an ROE jump? Now, the fourth piece is with regard to demand environment and pricing. Of course, this is key in a micro market like Mumbai and Mumbai metropolitan region, which is what Keystone really relies on. It's obviously a risk, but also the kind of pricing and realizations that are playing out are crucial and essential to understand the underlying trends of what's playing out. The sixth piece is with regard to the split between residential and commercial. I want to understand how that split is likely playing out. Outside of this, what I'd also want to know is how approvals are coming through, and whether approvals are coming through or whether there are any challenges, project delays and the like, because that's a crucial element in real estate. Everything relating to execution is a concern, and therefore approvals is one of those key cogs within the real estate machinery which could throw a spanner in the works. In terms of the last piece, now this is completely new. They're foraying into Pune. What are the plans? That's one. How do they plan to enter the Pune market? And point number two is the timeline for that entry, because this could be a new lever, a new vector of growth for Keystone. Let's try and first understand the business itself, what Keystone does. Of course, it's into real estate, but let's try and understand it a little better. It's a leading player in the MMR, which is the Mumbai metropolitan region market. It's an MMR real estate developer. They rely on joint development or redevelopment. That's the model on which they rely on. So they are trying to keep the asset light model or operate under the asset light model, which is the redevelopment model, wherein they don't have to acquire land for the purpose of the project. So that's the approach they currently take. That's, of course, some history and what we can expect going forward. Now, in terms of products, let's try and understand the product list. The residential developments, they have homes across segments. You're looking at the affordable segment, which is less than 1 crore. Then you have mid segment, 1 to 3 crore. Aspirational segment, 3 to 7 crore. They have presence across the board. But of course, you'll see the tilt or the skew in terms of each of these. Then you have, of course, the premium and then the super premium. The premium is 7 to 15 crore odd, and then there's the super premium, which is above the 15 crore threshold. They also do commercial spaces, which is office and retail. They do plotted developments, which is land parcels for buyers. And they do property management, which is post-sale services, which they provide the properties or the construction or the site that they have worked on. In terms of geographies, it's entirely MMR focused at this point. Residential is Mumbai, Thane and Navi Mumbai. Commercial is Bandra and Prabhadevi. That's what they focus on. And then they have plotted developments obviously it's in development, it's under development in Kasara and Manori. But it's very, very Maharashtra focused and very, very MMR focused. So that's something that we are seeing. In terms of the projects, there are 19 ongoing projects. 1 is commercial, 3 affordable, 4 mid-market, 4 aspirational, and 7 are premium and super premium. Again, the margins there will likely be better, and that's why our focus on that segment. Forthcoming, going forward, there are 24 projects in the pipeline, 3 commercial, 3 affordable, 11 within the mid and the mass segment. So that's likely to be the outlook going forward. 5 aspirational and just 2 premium and super premium. So that's largely the split between the ongoing versus the forthcoming. Overall, they have a GDV pipeline of around 60,000 crore. It's a 6,000 crore market cap company. The guidance is a 15 to 16% profit margin on that 60,000 crore. And the GDV is 60,000 crore rupees. So that's something you want to keep on your radar. Let's quickly look at, let's start off by understanding the metrics that we will track, as is the case with, this is of course the FY26 guidance. It will come to you in just a moment. But first off, with regard to revenue, you can see the choppiness in the revenue that largely is led by execution. Accounting follows first execution and thereafter accounting as part of sales, and therefore that's something you want to keep your eye out on. But they've done a 16% CAGR growth, which is decent. You're looking at EBITDA growth of just 5%. Again, the choppiness is evident within the EBITDA numbers as well. And profit growth of around 11% CAGR is what they've clocked over the last 3 years. Less consequential, but what you'd want to see is a little more stability, and therefore, once the run rate starts to go up, we'd want to understand as to whether the numbers can stabilize and execution can happen at a steady pace or not. Even if you're looking at it on a year-on-year basis, you never look at real estate quarter-on-quarter, of course, a year-on-year process, but stability is what one would hunt for. In terms of H1, FY26 has been a tough H1. The numbers are down, but as a result, we'll try to understand as to whether there's expected to be a significant ramp up or not with regard to these numbers going into H2. In terms of operational, you look at the margins, of course, that's one piece that you look at. 35% is the guided gross margin, but you'll see choppiness there, not looking pretty at all. But more importantly, look at the 9-month numbers for the operational updates. In terms of judging traction, you look at pre-sales numbers to a certain extent, arguably the pre-sales numbers, but that's what you can see on your screen. Around 67% is what is achieved versus the full year guidance. You can see the launches have are well on course to hit that 7,000 crore number for this year. And project addition in terms of GDV has been extremely strong. So that's something that really stands out. So project addition is there, but conversion to pre-sales is really the question, and whether they can do that in H2 or whether they're seeing that as part of Q4 in terms of the pipeline is a question that we'll ask management and we'll probably get answers to. This is, of course, the 9-month period data which I just showed you with regard to GDV. Let's talk about the balance sheet now. In terms of the book value, it's at around 2,700 odd crore. It's 1:2 price to book, or 2:1 if I can call it. You're looking at the borrowing number at around 1,200 odd crore. The guided borrowing number is expected. Gross debt to equity is 0.75. They're nowhere close to that. But at the same time, some amount of debt or some amount of leverage has gone up in the system. That's something that you want to look out for. 1,200 crore is end of Q2 FY26. Let's look at cash flow now. That's the other critical element. In terms of the cash flow conversion is not really happening. You'll see net cash flows being very strong, but that's because of the equity issuances that the company has done to dilute the promoter interest to meet minimum public shareholding. We'll come to that when we look at the shareholding, but and that's why that number is positive. But outside of that, the cash flow otherwise is negative. We want to understand as to whether cash flow conversion can start to happen or not at a fairly quicker pace. Let's look at return ratios. While the aspirational ROE is around 25%, and the project SPV level ROE also is 25%, essentially that's not reflecting here. So you'd want a scale up in terms of the top line to try and justify the kind of return ratios that they used to do earlier, which is 18% at the end of FY21, and get to that 20-25% ROE. Again, that bump up will likely be fairly quick. At least that's what analysts seem to be penciling in, and I'd be keen to know when that actually translates or when that actually happens. Let's talk about management guidance. So let's talk about shareholding first before we talk about management guidance. You look at shareholding, it's gone from 87% to 74% or 75% to comply with minimum public shareholding. FI interest continues to remain very low, single digit. You look at DI interest, though, it's gone up. The likes of a quant mutual fund has a 4% stake in Keystone, and that's large because the free float itself is just 25%. So 4% of that is owned by a quant mutual fund, for example. Public holds a very small quantum, and the number of shareholders hasn't gone up materially at all. It's just about 15 to 22,000 in terms of number of shareholders, not gone up materially. Now let's talk about the guidance. GDV of ongoing projects is around 16,500 crore. The forthcoming GDV is roughly 43,500 crore, and you're looking at gross margin target of around 35%. Net profit margin is expected to be 15 to 16%. That's the aspiration. FY26 launches at 7,000 crore. We spoke about this. The gross debt guidance is less than 0.75. Pune entry is expected beyond FY26. Growth lever is cluster development, which is taking on 3 or 4 small buildings and developing all of them in a cluster format. And ROE target is 25%. Let's talk about what analysts are recommending or how are they viewing it. 3 analysts track this one, all 3 with a buy call. There's Investec, there's JM Financial, and there's Axis Capital. So they're not small analysts per se. They're good analysts, all with an upside target. The average upside is 65% on this one. So mark that for yourself, viewers. Broadly, it's a very positive looking kind of, even in terms of price to earnings, it's at 18 times FY27. But we're looking for that turnaround in terms of top line and execution. That could well lift the EPS and well lift the profitability, which will lead to a fall with regard to the price to earnings ratio. And to understand all of these nuances, let's bring in Boman Irani, who's the chairman and managing director at Keystone Realtors, joining us. Boman, always great speaking with you. Let me first start off by setting the context for FY26. How confident are you of achieving the kind of pre-sales numbers that you've guided for of 4,000 crore? And also talk to us about what levers will you use to achieve that? Because it's certainly going to be a large growth versus what you've done in 9 months.
Hi, Arj. Thank you for having me on your show. Thank you for summing up so many points that you have kind of run through. I just have 1 or 2 comments, if I may. We don't rely on, we choose to be a partner with, for redevelopments. At the same point of time, we choose to be those that will partner with landowners so that we stay as an asset-light company. And this has held us in good stead. Even when the markets react negatively, we are generally performing quite well because we don't have huge amounts of money blocked up in land, etc. 2 is redevelopment, which is the lifeline of this city. Has been something of a forte for us. We've been doing it since maybe 2002. And that means I have a 24-year march over every other developer who's now dabbling into this. And we've seen the results of that being extremely good. As a matter of fact, we have this year in our business development guidance, we had given about 8,000 crores. We've stripped that out to 8,650 crores already. And that means we've more than covered the entire guidance for the year in terms of BD. And on the launches, we had said 7,000 crores. Harsh, we've already crossed about 5,850 odd crores, give or take a few crores here and there. In terms of the launches itself, we have a strong, steady pipeline of projects under execution. Yes, there are challenges in terms of execution on site, but you're aware we are one of the first companies that is moving towards newer and newer technologies. including precast, where we are building out an entire layout of ours under precast to check how it really works out for the Mumbai market. And for this, we've tied up with Robin Village of Singapore. So the quality of it is the best of the best, and there's nothing that the Mumbaikar would yearn for other than that. We also want to kind of be environmentally conscious, and that's why the precast is going to play a very big role. At the same point of time, it's going to allow us to kind of execute projects faster. On the guidance, specifically your question on the guidance, I can tell you 4,000 crores is what we have guided for. 2,676 crores is already clocked as per as per the last quarter. That's in the 9 months of the year, and that's about 63% of the entire, 67% of the entire GDV that we've assured. And Harsh, I'm sure you're aware that ours is a business that goes quarter to quarter. Of course, you're very right in saying we better look at it year on year, or even if it's possible, over a period of time. But the first quarter sales are always very low. The second quarter are slightly better. Maharashtra gets a whole slew of life in the third and the fourth quarter when the maximum number of sales takes place. I can confidently tell you that we will not only cross 4,000 crores, we'll cross 4,000 crores with a wide margin in FY26.
Wow, that will be impressive to watch out for in Q4, those numbers. But thank you for that. That kind of sums it up very, very well. Let me talk, Boman, about the lift with regard to revenue, because it's been long anticipated. When does that happen?
So, Harsh, I'd just like to dial back to the time when I said that Rustomjee is one of those companies that has 100% completed every project of its with OC. And this goes towards building a trust in the brand, which is what we consider as prime in the real estate business. I think if a consumer can kind of put their faith in you, and this was being done much before RERA, and after RERA also we are one of those flag bearers for completion of projects. We've had certain legacy projects that we had to complete, and those will all end in this financial year. In the next financial year, we are going to go in with a fresh approach. That is, all the GDVs that we are promising, or all the GDVs that we are announcing or guiding for, will have a gross profit margin of about 35%, if not more, on the projects that are. And as far as the spread across the city, like you mentioned, we have projects across every category, including affordable housing, which I'd like to say is under 75 lakhs in Mumbai. We're giving homes in Dombivli, and we're giving plots of land in Kasara, which are both doing extremely well. And we're across the spectrum in everything from mid to mass and aspirational. Our view and all the data points towards this category growing the largest in the city. And some of the launches that we've had, like you mentioned, 11 projects that are there are going to be in the mid-mass and aspirational category. And premium and uber premium are also something that are driving growth. As of right now, we've got many projects that we've launched and are in various stages of completion. And we've seen that the market receives our products or our homes in these uber luxury with a great amount of happiness and satisfaction. And that is evident from our Bandra launches that we've done. All of them have been great sellouts. As far as prices are concerned, we are a very data-driven company. We believe that every market has a price point at which it can absorb. And personally, as a favorite, I can tell you, I am one for volume rather than prices. And, price appreciation doesn't lead to any good for the developer, whereas volumes definitely do. And volumes means you've got to have a company that's backed by great developmental expertise, great business development, great approvability, and someone who has got a great design intent, where homes that are created for the long run or long-term life of the consumer. And on all of these counts, we've been building our strength. And today, I can confidently say we are one of the 4 running developers in Mumbai whose homes are sought after.
Boman, as a fellow Mumbaikar myself, I don't doubt with regard to the quality of Rustomjee's construction. There's absolutely no doubt there. But as an investor, I want to try and understand. You're at 2,000 crore in terms of top line. Where do we go from here in FY26, FY27? I'm trying to understand, is execution delayed, and therefore will FY27 be the year in which we'll see significant bump up in revenue, or will it be FY26?
So, I'd like to again dial back to state that every year we've given a guidance and we've lived up to it. We had given a guidance of 3,000 crores last year. We achieved it. We've given a guidance of 4,000 crores. I've already said we'll cross it by a margin. I think I don't want to make very forward-looking statements. A lot of it depends on the market, which according to me will continue to grow in Mumbai MMR, especially because of the kind of infrastructure thrust that is out here. And again, I think you mentioned something, but I kind of maybe making a point towards we go to where the infrastructure grows. We believe that Mumbai will grow along the lines of the infrastructure itself, and for that, our forthcoming launches are in that part of the city where maximum amount of infrastructure thrust is taking place at the same point of time. It is a very sought after location and comes with a great amount of social infrastructure around it. We've been pioneers or masters in the gated communities, gated developments, gated estate developments, which lead to great community living. And there has been no execution issue. I'm not sure where this comes from. There's been no execution issue. We've been executing on call. Yes, we continue, move towards better technologies to allow us to improve the pace of construction and development. And I think in years to come, we will only get better. And our size will keep growing. We've given 25% year-on-year growth. I'm hoping to keep that velocity.
Right. Boman, yes, there's absolutely no doubt with regard to, compliance of a Rustomji or with regard to execution. What I'm trying to get to is, you've got 60,000 crore of GDV pipeline, right? When does that start getting recognized in revenue? Does it happen over the next 5 years? Does it take longer? How should one look at that? And out of that, 16 to 17,000 crore is the ongoing projects. When does that get recognized? Just if you can break up the timeline, because at the end of it, it's all about profitability, at least for the investor. So I'm trying to get to how do those numbers start to shape up maybe over the next 2 to 3 years?
No, very valid, and thank you for that question. But let me just take a slight bit of time to explain to you where these numbers stack up. Almost 20,000 crores of this GDV that you're talking about is in projects which are what we call the township projects, or projects that have a longer gestation period, which will continue over a longer period of time. And just to give you an example of Thane, Thane is about 8 or 8,500 crores in terms of residential, and the balance in commercial. And we're clocking about, I would like to say, close to 800 to 1,000 crores out there. So you're talking of a pipeline for the next 6 to 7 years. Then you look at the projects which are ongoing. Every project that we launch, we'd like to state that would get completed within 3.5 to 4 years. And given the Mumbai landscape, we usually have a sales trajectory of about 35 to 40% being what we do at launch, and then about 30% that we do through the life cycle of the project. In the last 6 months, there's a lot of activity because people are looking at completed homes in a much more I would like to say, a preferable manner, which allows them to make the investments closer to when the homes are getting readied. And they pay the price for that. But in the last 6 months, we've seen, and immediately after the project is completed, in the first 6 months thereafter. So the last 1 year is where the maximum activity of about 25 to 30% of sales takes place. Now, exact numbers would be lacking, but if you're saying 17,000 crores, you're talking 17,000 crores, which would get realized in 3.5 to 4 years. And with a guideline of about 7,000 crores in terms of launches this year, those will also get added on, of which 5,000 has gotten added on, 5,800 has gotten added on. But I think this will be the policy we have is if 1,000 crores worth of projects are completed, at least in that micro market or a similar price point, we try and launch about 1,500 crores of inventory.
Excellent. Boman, it's been great chatting, frankly, and I can go on, but unfortunately we're just completely out of time on this edition of the show. So thank you so much for coming in and speaking with us, giving us that perspective. And viewers, completely out of time. Hopefully this was productive. Stay with us here on ET Now. More action to follow.